Hey, I'd like to welcome you to another episode of the Mission Matters Money Podcast, your source for all things money. My name is Adam Torres. You can follow me on Instagram at AskAdamTorres. Keep up with my book releases, book tour schedule, signings, all that other good stuff. Always love to connect with you there. And as always, if you'd like to apply to become a co-author of one of my upcoming books, just head on over to the website, missionmatters.com, and click on Become an Author to apply. All right, so today I have John Paniagua on the line, and he's principal and owner over at OneWay Holdings. John, welcome to the show.
Thank you, Adam. Pleasure to be on your show. Looking forward to it.
All right. So, John, I'm excited to get into what you're doing over at OneWay Holdings and how you're working in the multifamily syndication business. However, I do want to get a little bit further into your background first. So how did you get started in this multifamily business? I know you work at the New York Stock Exchange. I mean, a lot of things going on. Tell us a little bit more about your background, please.
Yeah, sure. I got into the multifamily business about 3 years ago. Really started 3 years ago. In 2017, because I ended up flipping a house I owned over here in Bayville, Long Island. And then I think that I got a taste for what it was like to flip a house, but I realized there was a lot of work going in, even though the return was good. It was just, to me, I felt like it wasn't scalable. So that summer I went to Las Vegas. I went there with my significant other and her daughter, and we happened to stop by, there was a convention there, and I happened to hear about Grant Cardone. And so what he was talking about made a lot of sense, and I did a lot of research. And then I realized multifamily apartment buildings, that's the way you scale a good real estate business. And that's how I started getting involved. And what I did was I realized quickly, living in New York and looking at the cap rates here and the rents and a lot of the legislation, the anti-landlord regulations, a lot of the rents, very expensive. I realized starting looking for a multifamily apartment building here was a very, very expensive undertaking. So I ended up realizing quickly that I had to find a mentor. And that's how, looking around, that's how I got involved with Michael Blank, because he's one of the best apartment syndicators in terms of mentorships in the country. So what was interesting was I ended up syncing up with him, and then I stopped for about 2 years, and then I picked it up back in 2019 towards the end. And then I joined this program, and I got to know another individual who's also another mentor of mine, Phil Capron, and he's a ex-Navy veteran, and he's focusing multifamily, to help out veterans to build out their portfolio in real estate. So coupling all that together, getting involved with Mike, then I decided while working at the New York Stock Exchange, because I still needed the income there, was to do a massive action in parallel. I ended up putting, it's essentially 2 full-time jobs for me, putting in 50 hours a week into that. So I work 50 hours a week at the New York Stock Exchange, 50 hours a week doing the multifamily business syndication. There's a lot of aspects there you got to cover. You have to have a website. You have to build out the business. So doing a joint venture, then I ended up doing a joint venture with Phil. We formed a syndication, and we were able to close on my first property. It was all the groups over, and it was in Chesapeake, Virginia, and it was 104 units. And then from there, other deals are starting to come down the pike. So I then realized, being in New York, I'm essentially investing out of state. So doing a joint ventureship really, really helps out, because you could split up the responsibilities, like who owns the key aspects of the joint ventureship. Because I can't travel to a lot of the asset management from New York, since I'm still in New York. So that's where the joint ventureship comes in. It helps out. Part of the team does the asset management. They're in Virginia, and I'm in New York. And I realized that my strength is going to be capital raising here in New York. I can do that because I realize there's an opportunity here in New York to be able to do that, to fund a lot of projects that deals, the potential deals that are outside New York. So in a nutshell,
let's talk a little bit more about kind of the type of properties and geographies that you like focusing on. Tell us a little bit more about that, please.
Well, definitely the key is, if you look at it, it's a couple of things. One is you definitely need a minimum number of units, and that's one of the reasons why we're looking at units near 100 units, because that gives you the scale. Because you can, when you do value add, which is to enhance the value of the property, either by renovating some sort of renovation on the property, the units. If you increase the rents, by a little percentage, it magnifies by having so many more units. It's kind of what they call leverage, and you can increase the value of the property that much more. So we definitely look for like 100. Around 100 units plus. And then you look for like what's called value add, what I mentioned before. So you can have a class C and you can add value add to class B. And it's that value add that where the investor's returns can be magnified because you're able to increase the rents or increase income by adding some other source that generates the income for the property. And that in turn then increases the value of the property by what's called the cap rate of the property in the area. The cap rate is usually determined by other factors, but if you look at that, the value of the property goes way up, and it's really driven by the income, the rental income. That's how apartment buildings are valued. Houses, when you look at single-family houses, it's very difficult to do that other than what's called speculation, where you hope the value goes up, over time, because the area is going up, is demand, the supply and demand factor. But that is essentially, that's what we look at, and you can't get that in New York. You can't get that in the tri-state area. The tri-state area, appears to be dominated by a small number of groups that own a lot of real estate over the years, and the rent stabilized units. What's left over in New York ends up becoming very, very expensive, and it's impossible to really justify the returns. There's some, you try to get returns of 15% IRR. You look at a 2 or 3 times, what they call a 2-3 times return on capital, cash on cash. You want that to be 8, 9, 10%. And it's very difficult in New York, very, very difficult, which is why that led me to look outside New York. Again, and that's how I got, mentors, and Phil is from the Virginia area, so he's very familiar with it. He's invested there. He's got, he manages properties there as a sponsor, and in other areas, Georgia, it looks very promising. Alabama now, North Carolina certainly. South Carolina. So there, when you look at the market rents and the properties that have there now, the cap rates, that allows you to get really, really good returns for your investors, especially outside the tri-state area.
That's awesome. So John, if somebody's listening to this and they final question, so a 2-part question. So if somebody's listening to this and they want to learn more about OneWay Holdings, what's the right type of investor and or fit that's typically a good fit to learn more about the deals that you work on, number 1, and then part 2, what's the best way for them to reach out?
The investors, what I'm looking to do is, I think the best, after having looked this and researched a lot of information, what I'm trying to do is build kind of an investor network in the tri-state area. So it would be somebody that, in the ideal situation is, somebody has a minimum of $50,000, accredited investor, or it could be non-accredited, but then you have to, like I said, we have to follow the SEC regulations on that, on the type of investor. But the investor is somebody that would be willing to invest $50,000 a year and on a consistent basis as deals come in. So my goal is to build some sort of investor network. It could be doctors, it could be lawyers, it could be people that have the type of income that they don't want to put into the stock market because, as you can see today, and you can see every so often you have these volatility spikes that you're seeing like today. They want to invest it into an asset that produces income on a steady basis, and that's really real estate investments, especially multifamily, or storage or another asset like that. And then on a yearly basis, and if I could build out this network, and that's one side of the equation. The other side of the equation, you have deals, really good deals that come along that have a very high internal rate of return, very good cash flows that are coming in, cash on cash flows. And that's what I'm looking to do, build out, 2, 3, 4, 500 investors. I remember Hunter Thompson, who was another one of my mentor, who, there was a report that was out, there's 12 million accredited investors in all the United States. And if you could just build out an investor base of 2 to 500, and with a minimum of 50,000 each, you're looking at millions of dollars of capital to deploy to these assets to generate income. So that's what I'm looking to build. And I guess the best way to get to me and to reach me is through my website. I've had this set up now. It's www.onewayholdingsllc.com. And I have a lot of information there. I put a lot of content there. I've written books, ebooks for publications. I have newsletters. You can sign up for that. And like I said, I have free reports. And then there's a form registration there you want. If you want to give me a call, the cell phone is there, and also my office that I have a virtual office in Fifth Avenue, New York, and you could dial that number, and I will get back to you.
Fantastic.
Yeah.
Well, John, really appreciate you coming on the show today and sharing more about what you're doing over at OneWay Holdings and your vision. And to the audience, as always, thank you for tuning in. Hope you got a lot of value out of this. If you did, don't forget to subscribe to the podcast, leave a review on the Apple iTunes Store. And if you're watching this on our YouTube channel, Mission Matters Money, definitely give us a subscribe there, but also leave some comments in the video. Love to know what kind of projects and things that you're working on. And John, thanks again for coming on the show.
Adam, thank you so much for having me. It's been a pleasure.